Happy Saturday, everybody. I hope you guys are having a great weekend. Here's your Nashville market update. I'm going to tell you not just what has happened, but I'm going to try to give you insight into what is happening. First thing I want to show you for all of Middle Tennessee. This is all 9 counties, active listings, new high, guys. This is a new 2023 high, and it will put pressure on prices, 59.87. This is really great news. And keep in mind, guys, this is with subdued volume. So if you're looking for a house right now, you're actually in a much better situation than you were in May. I use contract volume versus closed volume, but when you use contract volume, you get a snapshot. You can feel what the market is like right now when you compare active listings to what's under contract versus active listings to closed volume, which is your traditional month supply. Guys, that's like a canned report. A month supply is not a good measure in a market that's moving as rapidly as what's happening in Nashville. So we only saw 1.7 month supply in May, whereas right now it's 2.4. It's increased almost a full month supply in that time, and we're seeing increases in supply every single week. Now, interesting fact about this 5987 is 30% of active listings right now are new builds. Why that's interesting is because last year it was only about 15%. New builds are a much bigger part of the story here in active listings, and they will cap prices. We are not going to see the price appreciation because new builds can make money where prices are, and they are building rapidly, and they're a huge part of our inventory. In fact, I had a conversation this last week with someone in Murfreesboro who said, why would I buy an existing home for $425 when I can get a new build for basically the same price and it's brand new? And guys, that's going to put a lot of pressure on existing inventories. And so you got to ask yourself, like, should I be getting a new build? Should I be getting existing? Should I just rent? I mean, all those are great questions. Let's look at Williamson County real quick. Williamson County, 1,053 active listings, guys. Again, this is a multi-year record, and I'll tell you, if you look at $1 million listings, this is an all-time record. The 1,053 has a huge chunk of $1 million listings. Look at the supply ratio. Again, active listings to contract, 2.8 almost, compared to where it was at the beginning of the year. It was 2. It's increased almost a full month supply. And guess what, guys? If we saw contract volume go back down to the Jan 1 low of 174, we would have right now almost a 6-month supply of inventory. And believe me, you will see downward pressure on prices if contract volume drops to where it was in December. Now, I don't know if that will happen. It could, but I don't think we'll see a repeat of just the absolute dropout in demand like we did last year, unless mortgage rates go up to 8%, which wouldn't surprise me, to be honest with you. I wouldn't be surprised if mortgage rates go up to 8%. I wouldn't be surprised if they drop from here, but I personally think they'll go up, not down. Let's take a look at Davidson County. Davidson County, contract volume is flat. Active listings, pretty strong, 1,900. Again, keep in mind, 1,900 was 700 under contract. But if we go back to that Jan 1 low of 350, we could see, again, almost a 6-month supply in inventory just based on contract volume, which could put massive downward pressure on prices. Rutherford, 895. They're starting an inventory build. You can see now you got to go back to January before you saw that. I said in July, I said at the June close that I thought July prices would increase because contract list price seems to be much higher than it was a month ago. Interestingly enough, we are not seeing that translate into higher prices yet. Now, we've still got the back half of the month, and I do think it will be pushed up into the 480 range just because of what's under contract. I don't think things going under contract right now are increasing the price. I think what was. But with those 7% mortgage rates, guys, that put a lot of pressure on sellers to cave on pricing. And we are seeing prices not move. We're seeing that gap grow 485 to 475. That's a larger gap than what was there at the end of June. I think it was only about 6,000. Now it's 10,000 between closed list price and closed sales price. So that is an interesting trend. And that tells me prices they're having trouble going up above 475, which is 5% down from where it was last year. Now, last thing I want to talk about a tailwind of immigration. Now, LinkedIn came out with their report. Two big things about this report that I think are interesting. One is that hiring, according to LinkedIn, is down 30% from where it was last year. I don't know how they get these numbers. I've looked at them, and it's just telling me that the economy is much different than it was last year and it's not as hot. But look at the migration, guys. Massive inbound migration. This is of 10,000 members in a given area, 8 from Los Angeles would have moved to Nashville. 4 in Chicago would move to Nashville over the last 12 months. This is a strong indication that Nashville is getting strong inbound migration. And you can see it here too. Look at the outbound migration. Nothing over 1 here. So the inbound migration is clearly strong based on this LinkedIn report. This is the latest report. It just came out on July 11th. But I did a survey. I called in Williamson County. There were 34 closings, 1 million to 2 million in Williamson County. So I called all the realtors yesterday and just said, hey, are your buyers local or are they from out of state? And here's what I found out. 17 responded. And of the 17, 9 said local, 8 from out of state. That's almost 50% are from out of state closing on those $1 million houses. And guys, as long as we have this massive inbound migration, and I'm telling you, they're honing in on Williamson County, the Franklin area, it tells me that we're not going to see prices fall. However, what I will tell you is if that migration pattern stops or reverses or something changes, it will put massive downward pressure very quickly. And that's possible, right? That's possible. This is a very tentative economy. There's a lot up in the air. Inflation is changing rapidly. Mortgage rates are changing rapidly. A lot of the job dynamics and unemployment are changing rapidly all over the country. And so we're seeing people move and move back. I talked to someone who said someone moved to South Carolina, moved back to Nashville. There's a lot of changing pieces to this that make this market very tentative. If you're not comfortable, you really ought to rent. From a financial perspective, renting makes a lot of sense right now. And I could do a deep dive on that, but I'm not trying to get anybody to buy in these videos. I just want to help the 30,000 people that are buying because, if you want to buy, you want to buy. And if you can afford it, you can afford it. And certainly if you're going to buy, you want to be very strategic about where you buy and why you buy where you buy. So with that being said, I hope you guys have a great week and we will see you next Saturday.